Hey everyone, Target reported fiscal year 2023 first quarter earnings results, and in this video I was going to review the big picture highlights from their latest quarter. Of course, Target is one of my top 17 stocks to buy right now, so I'm also going to update that recommendation after reviewing the earnings. So, did these earnings results from Target change my recommendation for Target stock? Is it still a buy? Is it still in my top 17 stocks to buy? I'm going to answer those questions in this video as well. So let's begin. So revenue increased by 0.6% for Target to 25.3 billion. Remember now, Target was a prime beneficiary of the coronavirus pandemic. Many stores were forced to close while Target was allowed to remain open. That, in addition to stimulus checks and stimulus money sent to people in the US, really fueled growth for Target in the last couple of years. So now it's finally easing up after several, I would say 2 to 3 years of phenomenal growth for Target. Earnings per share of $2.05 was down by 4.8% from the same quarter last year. That was better than I was expecting due to the fact that Target is on a promotional campaign, a cost cutting campaign on inventory because it had way too much inventory on hand, which I will talk about a little bit more later. But I thought earnings per share would come down a bit more, so I was pleasantly surprised by this figure. Impressively, traffic at Target stores increased by 0.9% compared to the same quarter last year. This is surprising to me because consumers have a lot more things they can do with their money now versus this same quarter a year ago and even 2 years ago, but Target still manages to attract people to their stores. I think it's a testament to their ability as a merchant. Same day services were again the winner with Drive Up generating high single digit growth. Now, high single digit growth, you have to keep in mind, comes on top of phenomenal growth over the last 2 years. People were using these services incredibly high amounts over the last couple of years. These Drive Up specifically is when you buy something online and then go to a Target parking lot and Target's employee will bring the item to you in your car so you don't have to get out of your car, and you can usually get the items within a couple of hours from ordering online. It's been really popular, and it's, in my opinion, a best in class service, especially if you compare with its one of its main competitors in the US, Walmart. Target service is miles better than Walmart's drive up service. Inventory in the first quarter was down by 16% from last year. This is something I was looking for Target to make progress on, and I was happy to see them bring inventory down by 16%. More impressively, inventory in the discretionary category was down by 25%. These are items that people no longer want at the same level they wanted last year. So think of things like TVs, Nintendo Switches, gaming consoles, board games, things that people were buying a lot of when we were spending more time at home. Those are less in demand now that we can go out, travel, go to restaurants and bars. And so the fact that Target reduced that part of its inventory balance by 25% was very good news. And then sales in highly repeatable categories are doing well. Things like food, beverage, beauty, makeup, things that you need to go in and buy more and more and more and more of because you consume them and then you're going to need more of. Those categories are doing really well for Target, and it's leading into inventory in those areas so that people, when they go to those stores, they find the things that they're looking for, and so they keep going back. Management is reiterating its guidance for the full year with saying that comparable store sales will decline low single digits or possibly increase low single digits. So it's a range there. And operating income will grow by more than $1 billion in the year. So a wide range. And so far, looking at the first quarter, Revenue increased by 0.6%. I think comparable store sales were flat. So the first quarter so far is falling within the midpoint of Target's guidance, and it's eliminating a bit of the bottom part of the range. The worst case scenario just got a little bit better for Target stock investors. So to answer the question, is Target stock still one of my top 17 stocks to buy right now? The answer is yes. I still like Target stock. Yeah, I still think Target stock is a buy. So I will reiterate my guidance to recommend Target stock as an excellent dividend stock to buy. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.